For more, let's bring in Sarat Sethi, portfolio manager at DCLA and a CNBC contributor. Sarat, good morning. Yeah, we were just talking golf, but no more golf talk. We're done now.
He loves golf.
He does.
Got some great memberships.
We can always talk golf, but we can do that later.
Maybe you can make some market analogies for us. Look, the question, we were talking to Stephanie Link about this earlier on, who, she's saying she's starting to look at NVIDIA at these levels here, 20 times earnings. So much selling pressure in that space this morning. What do you think about it?
Look, it's one of our core holdings, is in fact one of our top holdings. I like the company, but I also think there's other areas to invest in. You just don't have to be focused on technology anymore. You can broaden your base to other companies that have strong balance sheets, cash flows, areas that have been weakened and have really come off quite a bit. So I think it's not to say, hey, NVIDIA is a great company. I like a lot of the tech stuff, but I think you can look at other areas as well.
Where would you be in particular? Kind of look at, are you looking to kind of, because people are now saying, okay, we had the big sell-off and the sharp sell-off, but now we've actually had a decent rebound, and is the rebound to the sell-off now over, and that sort of thing?
So I would look at it at strong balance sheets, cash flows, look at companies that don't have a lot of debt. So for example, Air Products, one of the leaders in industrial gases, new management, they focused on hydrogen, taking away all the international growth that they had that was actually didn't have good returns of capital. And the thing with Air Products and another company, Waste Connections, which is the waste management, both of those have long-term contracts, higher than inflation, and they're going to have, and great dividends too. So I like those two companies. Those have come down quite a bit. Air Products is at 20 times now. Used to always trade at 25 and over. Same thing with Waste Connections, where you're going to get, literally 7 to 9% earnings growth in an uncertain environment where you could get a growth top line and bottom line. And then, Kelly, go back to financials. I mean, you look at a Morgan Stanley and a Blackstone. They're trading, Morgan Stanley's trading at 13 times earnings. Look at their business, which is core wealth management, but you get all the upside in terms of trading volatility. If you get any positive news on deregulation, capital markets waking up. So you do have companies out there that you can actually have a diversified portfolio and not just focused on Mag 7 or areas that, can go up and down depending on what the negotiations happen with other countries.
So leave us with a parting thought. Again, we see markets are trigger happy on any headline that might bring us some positive news, like U.S.-China. We've got the Japan trade talks happening later today. Do you think, what kind of position are we in broadly here?
I think in the next few months, you're definitely going to have choppiness. Look at the 9% up and down you had in the last 2 weeks daily at some points. But stay invested, stay within your allocation, and diversify. I think you can get really good companies, diamonds in the rough, upgrade the portfolio. Don't just have concentration in one or two areas. And you can look at, and one last thing, just look at what United's earnings. We own Delta, which is one of our core holdings too. You can actually invest in cyclical companies that are now trading at valuations that you haven't had. Look at the management teams, look at the cash flow, and I think you can go forward and actually do well in this market.
I was going to say you sound a lot like Stephanie until the airlines comment, because she's not a fan.
Look, I like Delta, the management team, the premiumization, the loyalty programs. You can make money in these areas, but you just have to pick your spots and also diversify the portfolio.